My name is Gerald Harris with houseflippingguide.com, common sense answers for new real estate investors. And today I want to talk about how to make money in real estate investing with little to no money. And so I want to break down 5 proven ways to invest in real estate with little to no money. And so number 1 would be a concept called wholesaling. Wholesaling, guys, has been around for 20 plus, 30 plus years. It's a concept where you go ahead and you tie up a property with a contract, and you turn around and you essentially sell that contract to a cash investor. One of the ways to go ahead and approach wholesaling oftentimes and find a lot of these motivated sellers would be doing things like driving for dollars and contacting people that have properties that look like they need a ton of work. You have some properties that look vacant and or abandoned. And driving for dollars, when you go ahead, you find these types of properties, you go ahead, you look up the properties on a public service, you research them, you contact the owners, and you see if they're interested in going ahead and selling that property. One of the reasons as to why people get into wholesaling is, if you think about traditional investing where you have to put down 20-30% down, you have to utilize maybe different concepts, whether it be hard money or whatever, with a concept of wholesaling, which is an aspect of creative real estate investing, you essentially aren't putting any money down, or the most you're putting down is a deposit, which makes the contract binding. This deposit is considered, it's referred to as consideration. And so let me walk you through a scenario of wholesaling. Let's say, for instance, you have an owner that has a property. That property is worth $100,000. But that owner needs to go ahead and move out of state because they have a job waiting for them in another state. And so they're highly, highly motivated. Okay, so you find out that that property has like a $20,000 loan on it, needs about $10,000 in fix up, and so that owner will go ahead and sell you that property for $40,000. So what you do as an investor is you go ahead and you write up that contract. However, within that contract, there has to be a specific clause that allows you to go ahead and assign that contract to a cash buyer. There has to be a specific clause. If that clause is not in there, you are going to be in a lot of trouble. So you must go ahead and know how to go about putting that clause to make it assignable, so that that cash investor that you're dealing with can go ahead and, number 1, close out the deal, and number 2, go ahead and pay you. This is a concept, guys, called wholesaling. Wholesaling is powerful because it allows you to go ahead and begin wherever you're at. I don't care if you make $100,000 a year or $5,000 a year. You can be homeless and struggling and still wholesale. You can be going through financial strain. You can be in foreclosure. You can be in whatever situation that you're in, but you can still wholesale real estate. You can even live out of the country. Yes, that is correct. People that live out of the country wholesale real estate within the United States as well. Okay. Number 2, lease option investing. Now, lease options are a little different than wholesaling. So with a lease option, you don't necessarily have to deal with fixer-upper properties. In fact, what you want to focus on when it comes to lease options, you want to focus on properties that are nice properties in nice areas. And another thing you really don't need with lease options is you don't need equity. So let me give you a scenario. Let's say, for instance, you have an owner that has a property that's worth $200,000. Now, also, the loan on it of that property is also $200,000. So essentially, there's no equity within that property. So for that owner to go ahead and give that property to a licensed real estate agent, it just wouldn't happen. They don't have any options. And so if that owner were to go ahead and go with a wholesale investor, they can't do that because they have no equity. So what it is, guys, is oftentimes these owners, they're stuck. You know, with a lot of owners, they're stuck. Some owners, they're just highly motivated. And so with a lease option, what you do is you negotiate something called terms. That's the beauty of lease options. And so when you're talking to the owner, you basically explain that you can go ahead and give them their purchase price of obviously the $200,000 price tag, but they got to wait a year or two. In exchange, what you will do is go ahead and take over the monthly payment. You'll take over the monthly payment on the property. You'd be shocked and surprised at how many owners would be motivated to go ahead and sell their properties this way because they're out of options, right? They may have a situation where they're, like I said, going out of town, need to go ahead and go to another job in another state. They may have done a situation where they're in the process of closing on another property and they still got this property hanging over them. What are they going to do? You know, making two payments can be very stressful. Lease option is a beautiful way to go ahead and set this up. And so with a lease option, you go ahead and you negotiate a purchase price of $200,000. What you're going to do with that monthly payment, let's assume that monthly payment of on a $200,000 loan, let's assume that monthly payment is $1,250 a month. At $1,250 a month, what you're going to do is this. You're going to go out and find something called a tenant buyer. So let me break down this. So right here you have a renter. Here you have a tenant buyer. And right here you have somebody in the process of that can qualify to go ahead and purchase a home. Oftentimes what you have, guys, when you have a tenant buyer, somebody that has gone through the pre-qualification process, but because of credit or income, they cannot buy a house, so they're forced to rent. Well, there's another option out there for them. It's called a lease option. And what this basically says is they can go ahead and lease this property with an option to buy in the future. And the beautiful part about that is they step into a homeowner position once they go ahead and exercise the option. The beautiful part with you as the investor is you're going to go ahead and get this property under contract. Any fees will be paid for out of the proceeds from your tenant buyer. And so your tenant buyer will typically pay somewhere in the ballpark of about 5%, somewhere around there. 5% of the purchase price of the property. And so if you do a 1-year lease option, you don't sell it for $200, you sell it for $215. Right? You have an option on that property. You sell it for $215, but you've told the owner that you're going to do a 2-year lease option. So your agreement with the owner as the investor, your agreement is for 2 years. The agreement that you have with the tenant buyer is for 1 year. And so what you're going to do is sell that property to the tenant buyer for $215,000. So you're also going to go ahead and charge that tenant buyer a little bit above what you're paying the owner for that property. So let's say, for instance, your monthly payment from the tenant buyer is going to be $1,500 a month. So you're making profits 3 ways. You're making a profit on the down payment, which is a non-refundable down payment. You're making profit on the monthly payment, which is the difference between the $1,250 and the $1,500, which is $250 in pocket. And you're making a difference on the end on the purchase price, which is the difference between the $200,000 purchase price and the $215,000. These 3 make lease option investing beautiful. Beautiful. Number 3, private money partnerships. Guys, the beauty about this is if you have the action, in other words, if you have the hustle within you to go ahead and put deals together, all you have to do is go ahead and go out and find private money partnerships. Where can you find them at? Family, friends, doctors, lawyers, dentists, your sphere of influence. You'd be shocked at the number of people that will lend you money and want to invest in real estate in that way. In other words, they may not have the time or the knowledge, but they have the money. You have the knowledge that you bring to the table. So everyone wins. They go ahead and invest in property. So let's say, for instance, you come across a deal. The house is worth $100,000. Same situation. The owner wants, let's say the owner wants $40,000 to go ahead and buy that property. That property needs, let's say, $5,000 in fix up. And you go ahead, your cash investors, you find the deal. So your cash investors go ahead and fund the deal, and they fund the fix up in exchange for a rate of return that is negotiated by both of you. And so when you go ahead, you close out that deal, they make money, you make money, everybody is happy. This is the beauty of private money, having private money lenders as partners, because you don't have to go qualify traditionally. There's not a lot of resources of money out of your pocket other than some time and driving and whatnot. And they get to go ahead and have a good rate of return being private money investors. It's a beautiful partnership, guys. Number 4, subject to investing. Give you a scenario. Let's say, for instance, someone is in foreclosure. They are foreclosing on a piece of property. And so they have a property that is a house worth $200,000, right? The house has a $120,000 loan on it. It needs $10,000 in work. However, they are a couple months behind. They got some fees and some penalties. So they're, let's say for conversation's sake, they are $3,000 a month behind on payments. So you come along and let this owner know that you can go ahead and buy the property subject to the existing financing. First thing you do is go ahead and cure that default. You cure those back payments. Second thing you do is you go ahead, you take over the monthly payments. The next thing you do is, obviously, as you're doing this, you go ahead, you fill out documentation. And then the last thing you do is you go ahead, you get a tenant buyer, like I said in the lease option example, to go ahead and lease option that property. Now, the beauty about this is, let's say, for instance, using that last scenario, when that lease option buyer buys that property for $215,000, and you've purchased that property subject to, whenever that buyer goes ahead and exercises that lease option, you make the difference between that $120,000 price tag. Because remember, before you go ahead, you lease option a property, the lease option tenant buyer knows that there's some fixing up done that needs to be done to the property. Why would a tenant buyer do that? Because they're in an ownership position. They're getting ready to gain an ownership position. There's a lot of people out there that want to be owners, but qualifying traditionally is tough. So they come to you, do a subject to deal. You go ahead, structure subject to / lease option deal. Everybody closes, everybody's happy. Have a nice day. You have helped out the seller because they didn't foreclose on the property. You've helped out the tenant buyer because they're getting ready to buy a property. You've helped yourself because you've made profit. Everybody is happy. The last concept, guys, is the buy and hold fourplex method. Let me explain. So let's say, for instance, you want to go ahead and purchase a 4-unit apartment complex. However, you don't have the monies to go ahead and purchase it, but you got fairly decent credit. So what you do is you buy the property FHA. So this is the thing, and FHA financing is pretty much owner occupied. So you got to occupy the property. 2 things can be accomplished here. Number 1, you make profit off of the rentals that you're getting from the 3 properties that you have, because remember, you can live in one and rent out the other 3. Number 1. Number 2, you don't have to, if you go ahead, you set this up correctly, you're not going to pay a mortgage or a rent. In other words, you'll live rent and mortgage free because your tenants will pay all your expenses. So let's say, for instance, you find a fourplex for $130,000. Needs about $5,000 or $10,000 worth of work, right? You go ahead, purchase that property. You borrow that 3.5% from a family member or a friend. Okay. So let me break this down on how to set this up. You borrow that down payment. Then what you do is you go ahead, you get 3 people in the property at $700 a piece that they're paying in rent. So that's $2,100 a month. Let's say your monthly mortgage payment is $900 a month. Okay. you have some fixing up to do. You can either go ahead and borrow that money, or allow the profits, the difference between the $2,100, the $2,100 and the $900 that you have coming in, you can have those profits go ahead and pay for that fixing up that needs to be done to the property. Okay. The win-win about the situation is this: you have you have tenants that are going to go ahead and move into the property, and a nice, decent quality property. It's fairly quiet, that you've purchased and you've created essentially. They're paying you $2,100 a month. You're going to go ahead and pay your mortgage. You're also going to go ahead and pay that person back on a monthly basis of whatever amount of money you went ahead and you borrowed from them. And you'll be able to go ahead and pay any fees that are associated with the property, any expenses, and maybe even put a couple of dollars in your pocket at the end of the day. This buy and hold fourplex method is gold. This is a beautiful way for you to go ahead and invest in property with little to no money. Guys, these are the 5 ways. Take care. Have a good one.